What time frame do I recommend for scalping? Scalping is not really today what is considered scalping, or what I consider scalping is not really time sensitive as much as style. It is style. So here, the best way I can do this is to demonstrate this on, a chart. Okay, so let me do this for you. Scalping versus trading. Okay, so check this out. If a stock drops, all right, boom, this is a drop. And the trader's idea is that now that it's dropped, this stock should bounce back to the upside. Okay. Now, what's the odds that the bounce move higher than where the stock began its descent from? What's the odds? If this move is down, you know what the odds are? Check this out. I'll tell you what the odds are. The odds of scenario 1, is there a way for me to print this? To type? Let me see. Okay. Don't know how to do that, but okay. The odds of this are 1 out of 10. Okay. So 1 out of 10. I don't even know how to do that. I don't know how to draw on this like this. But okay. So 1 out of 10. Now let me do it a different color. Now, scenario 2 is this. The odds of coming right up to the former high, right? So odds 1, going past the former high. That's 1 out of 10 times. Coming to the high is 2 out of 10 times. Okay. But check this out. This is going to be interesting. This is going to be real interesting for you traders. Let's get another color here. Coming halfway, okay, 6 times out of every 10. Wow. 6 times out of every 10. Wow. So look, the blue line going all the way and surpassing 1 time out of every 10. Those are your odds. So you're going to be wrong 9 times. You're going to be right once out of every 10 times. Going to the high or near the high, you'll be wrong 8 times more or less, right 2 times out of 10. But if you go for halfway, you're going to be right more than wrong 6 times out of every 10. I got one more for you. Now let's cut this in half. Let's do a different color. Check this out, guys. What color should I use? Let's do green. Let's go 25% up. That's 8.8. Let's round it. 8 to 9 times out of every, you get the green. 8 to 9 times out of every 10. Do you understand me, traders? 8 to 9 times out of every 10, you get the green bounce. The blue bounce, 1 time out of every 10. The red bounce or the burgundy bounce, 2 times out of every 10. The red line or the 50% bounce, you get that 6 times out of every 10. The last one, 25% bounce, you get that 8 to 9 times out of every 10. So where do you think the scalper lives his life? The majority of his life. You tell me. Where do you think the scalper, which one? 100% plus, 100%, 50%, or 25%? Where does a scalper live? There you go. This can be done from a long-term perspective. You can do this on a monthly chart and still scalp a monthly chart. A daily chart, you can scalp a daily chart, go for 25% off the low, back up, right? 2-minute chart, stock drops on a 2-minute chart, 25% retracement back up, go for that. It's more of a style than it is a time frame. Do you understand? So understand the style and you've got it. Guys, where would you be getting this if you weren't here? Where would you be getting this? This level of nuance, this level of detail. This is 33 years of experience talking to you traders. Now someone's, let me see. But isn't it better to wait for the short? Well, not necessarily, because look, let's put it all in perspective, right? Put it all in whoa. What did I do? Put it all in perspective. So here's a pullback that's a buyable pullback in the midst of a power run to the upside. Okay, pull back. You see that? Pull back. You come in here and buy. Boom. Now, obviously, if this is deep enough, the odds of going 25% of the way back up is higher than 100% of the way back up or more. So the scalper lives in the 25% bounce world. Oliver, how do we know the start of a 25% bounce? What should be the entry point for the 25%? Well, you know, that's what I teach my traders, guys. You've got to have a variety of buy events. You wait for those buy events to happen. And you can't just randomly guess, oh, I think it's going to bounce here. I think it's going to bounce. First of all, if you're thinking, you're a novice, right? Professionals don't think. However, if my plan is to make $200 today, is it considered a plan? What is your recommendation to be a plan for every trader? No, that is far from a plan. That is a hope. That is a wish. That is a prayer. We're talking about a plan, right? I just hope I make money. That's not a plan. I hope I make $200 is not a plan. Can it be a component of a plan? Can it be a profit-taking component of your plan? Absolutely. But profit-taking is one component of a multi-component trading plan. So a trading plan includes what are the opportunities that I act on? Do you know that most people fail at step one of a trading plan? They don't even know what's an opportunity. If you ask them, define what a buy opportunity is for me, for you, they'll be like, well, it's when I think or feel that it's gonna go up. Like that's a plan? Really? When I think or feel? No, you gotta have this every single time this happens, I buy. Every single time this happens, I buy. And then a part of the plan is, okay, which one of these every single time these happens? Let's say you've got 5 things. Every single time one of these 5 things happens, no questions asked, I buy. But these 2 I buy lightly. These 2 I buy heavily. These 3 I buy normally. You got to have your plan. What's a heavy? What's you got to have where do you protect yourself plan? How do you protect yourself? That's a component of your plan. When do you add to positions? That has to be mapped out in your plan. When do you take profits and when do you take all of your profits versus when do I take a portion of my profits? When do I adjust my protection? upward in a buy scenario. That has to be mapped out and be specific part of your plan. If you're doing these things on the fly, in the moment, you're not applying a formula consistently. And how can consistency come from doing things inconsistently? So this trade, you do it this way this time. The next trade, you do it a different way another time, and then a different way a third time, and then a different way. You feel this way on trade 1, you feel another way on trade 2, you feel a different way on trade 3. You trade this one randomly with 2 lots, this one with 1 lot, this one with 10 lots, this one with 5 lots. This one you add to, this one you don't add to. Like, how can consistency come from all these randomly moving parts? You've got to bring yourself to the point where you have a formula that you can apply like a freaking robot to every single trade, irrespective of the circumstances, irrespective of what it does, irrespective of how the stock or the market is trying to trick you. You gain consistency from doing every trade consistently the same way, running every trade through the same process.